Hey everybody, it's me again, Adam Chapnick with the Security Token Academy. We are here in Los Angeles at the Crypto Invest Summit 2018, and we're joined by a very special guest, Abel Cuskelly, the CEO and co-founder of Abstract Tokenization. How's it going?
Good, thanks for having me on.
Yeah, great to have you. Okay, so first of all, for everyone who hasn't heard about the company, why don't you tell us, what do you guys do?
Yeah, so Abstract Tokenization is an end-to-end CRE tokenization platform that automates all the functions of a security token offering, from the technical functions of structuring a security token that's compliant with security laws, to the smart contracts and the distributed ledger technology, as well as the other components like legal and operational, such as servicing. So automating the reporting and distribution processing of those security tokens that we're issuing for commercial real estate sponsors.
Amazing. Okay, so this is definitely, we've been hearing, one of the first sort of verticals that are getting into security tokens is real estate, and specifically CRE. How did you guys decide that this was the thing you wanted to do?
Real estate globally is $280 trillion in asset value. So the largest asset class in the world, number one. And number two, only 1.4 trillion of that was exchanged last year in 2017. Wow. So less than 0.5% of liquidity in the largest asset class in the world. So we actually came from a background as tech founders and had been playing around in the crypto markets for a few years. And my co-founder, BJ, comes from the commercial real estate space. So we started talking about how blockchain technologies can be applied to some of the major challenges facing commercial real estate, chiefly liquidity, and then also some of the inefficient processes that are oftentimes still manual in the real estate space, whether it's stuffing it, writing out a check and stuffing it in an envelope and sending it, versus just having a smart contract trigger an ACH distribution based off either time or other variables. And so we started addressing it, and the number one thing that came up is investors want liquidity. They don't want to be tied up for 5-7 years in institutional quality real estate, because they don't know what's going to happen in 5-7 years. So the ability to have liquidity without taking away from the sponsor or the issuer, secondary peer-to-peer liquidity, is a very, very important thing for them.
Absolutely.
And so number one, that, and number two, there's a lot of processes there can be made more efficient, which we can do with blockchain technologies.
Yeah, it's like they've still got like the file cabinets and the paper.
That's right. And we want to simplify that, make it super easy, make it very easy to adopt, and just a nice, familiar, comfortable, flow and process that doesn't make them think, wow, this new technology scares me, I'm just going to avoid it.
Yeah. So where do you see the biggest opportunity? Well, I guess.
So in the commercial real estate space, so we're looking at, the number one underserved space in commercial real estate is the mid-market, right? 70% of the deal flow is there, but it's actually one of the least covered by analysts.
What counts as mid-market?
Yeah, so I'd say anything from 5 million to 25 million in sort of offering sizes. There are also, essentially, you're looking at sponsors who are, AUMs of 1 to 2 billion under management. And for us, we're focused specifically on US commercial real estate to start. So there's 19 trillion in high quality, investable, global real estate. And in the US, there's about 8 trillion. And we know that, there's a big investor appetite in Asian communities and in a number of places internationally that are very interested in access to commercial real estate in the US.
Yeah, absolutely. So we hear a lot about, especially in the commercial real estate, that there's going to be these different sort of visionary uses of the security token. They could be fractionalizing everything, where I'll be able to buy a piece of the Empire State Building, or I'll be things like that.
So,
is that going to be something that we'll see soon, or is it first, like when you're talking about mid-market, is it like just the dentist who owns like a 4-unit down the street but wants to,
Yeah, so we're starting to see it already. So actually, just a few weeks ago, there's a $30 million Manhattan
in the East
condo
Village,
complex
in
the East Village that was tokenized. Also this month, the Aspen St. Regis Hotel just announced they closed their 18 million tokenization of about 20% of the ownership of the property. And so we're seeing some. It's really encouraging to see some of these iconic properties like Aspen St. Regis in Colorado, and some of these high-end properties really taking the first steps in and being the pioneers. And we expect that as those couple first early adopters test the waters and sort of prove that it's safe and de-risk it, we're going to see a lot more sponsors piling in. And we're already getting a lot of sponsor demand coming to us and saying, hey, when will you be live? When can you launch this? And when can I do this with you? And I think that the bigger challenge is probably on the investor side and getting investors comfortable with this new tokenized security structure and how that's different than traditional securities, some of the benefits that has, such as 24/7 control and access to trading and 30-minute settlement instead of 3-day settlement.
Yeah, so how is this different from, or is it, from sort of a couple years ago we had the proliferation of the commercial real estate equity crowdfunding platforms. We had Fundrise, we had Patch of Land, we had some were in debt, some were in equity.
Right.
How does this fit in? Well, does it fix some of their problems, or is it different? Is it the same?
Yeah, so the Jobs Act is what enabled a lot of this innovation to happen and what enabled the crowdfunding movement to really start. So they were the early pioneers. I know Ryan Feet with Seed Invest was instrumental in drafting some of that legislation, as well as many others. And it's basically an evolution of that. So crowdfunding, raising under SEC registration exemption, regulation CF, allows you to raise up to just over $1 million. Some of the regulation exemptions that we're utilizing are Reg D 506C, which unlimited amount of raise for accredited investors, Reg S, which is international and with smaller minimums. So opening up this global capital pool to real estate sponsors in the U.S. and at smaller minimum sizes, and then also Reg A Plus, which is an interesting one. It has a lot of opportunity. It's kind of a combination. You can do non-accredited and accredited, up to $50 million, although they're looking to try to raise that to $75 million. The only downside with Reg A Plus is there's some additional reporting requirements, which aren't necessarily bad if the sponsor is willing to take them on, and if we're able on the back end with our smart contract technology to automate a lot of that reporting for them and automate the report filings and all that kind of stuff. So we can see real time who all the token holders are, exactly their ownership, and then all the information on them that the sponsor would need to report.
So are you guys using the Ethereum ERC20 smart contract technology? Is that what you're...
Yeah, so the base is ERC20. It's compatible with all the existing wallets. I think 90% of all blockchain activity is still occurring on Ethereum's blockchain. We're building in security laws, restrictions around transfer restrictions, 12 months for...
AML.
We're doing KYC, AML, credit investor verification, all those pieces. And what's interesting is, so there's a security token sort of standard of, with restrictions that are compliant with the laws. What's interesting is that as we evolve, there's other blockchains that are permissioned and private blockchains like R3's Corda, Hyperledger's Fabric, that are going to be very interesting for the privacy that they create. And so only a permissioned group of users, such as investors, can see relevant information on the property once they've been properly gated or once they've invested. And so we're building a platform that's somewhat agnostic to blockchain, which blockchain we use. We want it to be able to be across all the different platforms, whether it be a public blockchain like Ethereum or a private one.
Phenomenal. Yeah, I think that's something that people have sort of, I don't want to say overlooked, but there's a lot of mania around everything being distributed and open and public and everything. But the thing is, people start to really think about it. Maybe a majority, I don't want to prognosticate too much, but it feels like a majority of the use cases are going to end up being actually private, so that people,
or at least off-chain and held in the company's private servers.
Yeah, exactly.
Behind the wall. But I think both approaches work. It depends on the sort of level of sort of privacy that's required. In the financial space, I think it's really encouraging, especially seeing the adoption by the financial institutions, traditional financial institutions. I think there's 24 major global banks behind Hyperledger's Fabric. Right, and so we want to make sure that we're our space in the industry is sort of jiving with all the other folks in the ecosystem. So same thing on the secondary, security token trading platforms. We were just talking with the director from T0 earlier today, and talking about some of the standards that on the secondary trading and structuring the tokens so that our standards are compliant with their standards. They all match up. Right.
So
properly.
That was exactly my next question: is are you able to track sort of the token through its different holders? Because that's going to be very important, or else it all falls to crap.
So number one, digital asset custody is super important. We need an SEC qualified custodian who can actually do digital asset custody, such as Prime Trust, BitGo. Some of these solutions are really good. Secondly, transfer agent. So digital transfer agent. Right now, I just had a conversation with the CEO and also the chairman of V-Stock Transfer. Traditional transfer agent, now moving in the digital space and really excited about it. And actually even heard computer share. The largest and most traditional is even moving this space. So it's super encouraging to see these incumbents adopting it, and actually the largest players actually adopting. And so for us, it's we have a back-end servicing issuer dashboard, and that dashboard allows the issuer to see all their token holders, real time. So here's the cap table, here's all the holdings, and here all the reporting and servicing, and to track, for the maintenance and tracking throughout the life cycle.
Right, that's great.
And it's essential, right? You need to have the full circle instead of just the one piece.
Yeah, some of the first players kind of ended after issuance, and you're like, that's not going to be very useful.
Right.
No offense to our friends who are maybe in that boat. Okay, now because you have this very specific insight into this area, where do you see, let's say, the CRE digital space in the end of 2019? Is it going to be double what it is,
question.
10 times what it is? Everyone's going to tokenize everything, or is it still going to just be like, I don't want to get into crypto?
I think we're, Jeffrey Moore has a great illustration called Crossing the Chasm, right? And in the first year or two, you have the early adopters, something around 2%, the early innovators, and those are the only sponsors and investors getting involved, right? So you have this initial sort of slow growth, and then eventually as you start going mainstream, you start seeing it ramp up. Now, what I would say is, I think people typically underestimate what will be achieved in 1 year and overestimate what will be achieved in 10 years. Yep. And so I do think that it's going to be a very exciting year next year with a lot of sponsored deal flow coming interested in this because their investors are saying they have interest in liquidity. The bigger challenge and the bigger question mark is how quickly will investors, traditional investors, institutional investors, even crypto funds, how quickly will they sort of accept this new structure and start adopting. Yep. And we'll have to wait and see, but from initial indications, there's a lot of interest. So one of our co-founders, who's spent his whole life in the commercial real estate space at American Capital Group, the last conference he was at for real estate, the most well-attended, highest attended panel was real estate on the blockchain. It was talking about blockchain technologies and how they can apply to real estate. So we know there's a huge amount of interest there. Yeah. It's just how quickly will it be de-risked for the masses to move in. It'll probably be a couple of years, right? But I do think we'll see some really nice growth next year for sure.
Great. Well, Abel, thanks so much for being with us, sharing your thoughts.
Adam, my pleasure.
We'll see you again soon.